Hi, this is Brad Levin. Welcome back to a very special segment of Legacy Wealth Partners Wealth Bytes. Today, I want to address some important aspects of the Coronavirus Aid, Relief, and Economic Security Act, better known as the CARES Act. Now, what we know is this $2 trillion plus program was designed to provide significant relief to counteract the economic downturn brought on by the coronavirus. There's a lot of entities that are going to benefit from this, but I want to talk about specifically are the benefits that you might qualify for as an individual or as a small business owner. First, as an individual, let's talk about the payment that you might expect to receive from the federal government. Now, if you filed a tax return for 2019, reporting taxable income of $75,000 or less, you could receive a payment of $1,200. Now, if your income is over $75,000, you'll still get a benefit as long as it's less than $99,000. And each $1,000 you earn over $75,000, your benefit will be incrementally reduced. Now, also, if you file a joint tax return with your spouse and your report income is a couple of $150,000 or less, joint tax filers will receive a payment of $2,400. And again, it's not eliminated above $150,000, but incrementally reduced all the way up to incomes of $198,000. Now, if you didn't file your 2019 tax return yet, that's okay, because your payment eligibility would be based on what you filed on your 2018 tax return. And this payment is going to come to you in the form of a check in the mail or direct deposited to your bank. If you have any qualifying children at home, that will also give you an increased payment of $500 per child. And if you don't file a tax return because you only receive Social Security benefits, your payment will be based on the information provided about you to the Social Security Administration, so you can qualify there as well. Also, there's some really fantastic expanded unemployment benefits that will really help out millions of individuals in America that have been really impacted by this crisis. First of all, the program expands the definition of who is considered unemployed to include people who are self-employed workers, independent contractors, people who work in what we call the gig economy nowadays, meaning they're like an Uber driver. In addition to the regular unemployment benefits that people can get, everyone that qualifies will also get an extra $600 a week potential benefit on top of the unemployment benefits for up to 4 months. So that's really great. Above and beyond that, the bill provides for funding for 13 additional weeks of unemployment benefits for this year. Also, some important tax issues to be aware of. First of all, the tax filing deadline was extended from April 15th to July 15th. So you've got more time to prepare your taxes. And if you pay quarterly estimates, your April 15th payment is not going to be due until July 15th. If you've experienced hardship because of this crisis, you may be able to take a withdrawal from an IRA or other retirement account penalty-free, meaning avoiding the normal 10% early withdrawal penalty if you're under 59.5. This applies on withdrawals up to $100,000 for those people that are either personally diagnosed with COVID-19 or have a spouse or dependent that was diagnosed, or if you suffer financial consequences because of being quarantined, a job loss, or reduced work hours. The reality is that's many people. Now, you'll still have taxes to pay, but no penalties. Also, if you have a 401k, you can take a loan for up to 100% of the balance, capped at $100,000, also to assist you. Now, if you have an employer that provides you a benefit of paying down student loan balances on your behalf, that's normally counted as income to you, but not for payments made this year. Now, the real big issue for a lot of retirees is they will not have to take required minimum distributions this year from their IRAs, which are taxable withdrawals. This applies to individual IRA owners as well as beneficiaries of inherited IRAs. This is a great way to help people save thousands of dollars potentially on their taxes this year by avoiding taking those withdrawals. Now, if you still need the income nonetheless, one of the planning considerations is to think about taking money out of non-IRA accounts if you have them. In fact, those investments might be down now, and selling those investments and triggering a tax loss might be a good way to generate income also on a tax-preferred basis. That's an important planning consideration to discuss further. Now, also, if you make a charitable contribution to qualifying charities, you can deduct up to $300 as an above-the-line deduction, even if you use the standard normal deduction. And you can actually have 100% of your adjusted gross income be deductible for charitable contributions this year, which is much higher than normal. Now, the real critical issues for small business owners to be aware of are ones that can really benefit for companies that have 500 or less employees. The first one is the employer retention credit, and this provides a payroll refundable tax credit for companies that retain employees but have been shut down temporarily or totally permanently due to the crisis. And they can have up to 50% of their wages in the form of a tax credit capped to $5,000 per employee. Alternatively, if businesses have had their income significantly impaired, like reduced 50% compared to last year, that's another way they can qualify for this credit. Also, you can have deferral of tax payments related to the employer's portion of the FICA and the SECA tax liability, or also this applies to self-employed individuals, whereby you can have 50% of those taxes that are due this year paid December of 2021 and the other half paid December of 2022. Also, if you have an existing small business association loan, there's support that could cover up to 6 months of those payments for you if you've got that. The real big program that's very popular for most business owners is called the PPP, the Payroll Protection Program. This is a loan program that's designed to provide an incentive for small businesses to keep their employers employed on the payroll. And the SBA will forgive the loans potentially entirely if the employees are kept on the payroll for the next 8 weeks and the money is used for payroll, rent, mortgage interest, or utilities. Now, the forgiveness is based on the employer maintaining or quickly rehiring the employees and maintaining the salary levels that were in place throughout 2019 on average. The forgiveness will be reduced if the headcount either declines or if the salary or wages decrease relative to that 2019 average monthly level. Now, the amount that you can get is 2.5 times your monthly average payroll cost. You definitely want to talk to a knowledgeable tax professional about this to make sure that you're reporting on your application the applicable numbers correctly. Now, the loan has a maturity of 2 years if it's not fully forgiven, but it's only at an interest rate of 1%, so that's great. And also, no more than 25% of the amount that you want to have forgiven can be used for non-payroll related costs. In addition to that, PPP program is also an emergency grant for up to $10,000 to fund and cover immediate operating costs. Now, you apply for this through the SBA at the sba.gov website, and you apply for the PPP program from your local bank you have a relationship with. If you're having any issues getting acceptance in their program or they're just not processing applications, you can reach out to us and we might be able to recommend an alternative for you. Now, also, if you have a business that reports a net operating loss this year or next year, 2020, you can actually carry back those losses for 5 years now, and there's an increased amount you can deduct from interest expenses from 30 to 50% for the next couple of years. So these are really important issues to be aware of. Again, not an exhaustive list, and it's really important on matters related to tax that you talk to an accountant to make sure you're getting proper individual advice. But we're happy as well to be here to give you guidance on the planning issues you might have questions about. Again, we're here to provide confidence and clarity for you. Thank you for listening.